And if you mentioned the BOE, if you were in the BOE, which camp would you be in? There's the 3, the 5, the 3 who voted for a hike today, suggesting the BOE could overshoot its inflation target, talking about the lack of slack in the economy. Which side would you be on, and what does that mean for our investing in inflation-linked bonds?
You know, I think your question with respect to the UK is really spot on, and I listened really intently to your discussion with the economist earlier, where I think part of the rationale for the 3 to vote for a hike this week was this week's inflation print in the UK, which surprised meaningfully above consensus and is actually sort of currently at a level above what was the Bank of England's target on a 6 to 12-month horizon. So I think what they're essentially doing is trying to put a floor under the pound, whereby they are not necessarily willing to let inflation run meaningfully higher than it currently is, given the sort of soft consumer backdrop that your economist painted. Because all that is really transpiring is a squeeze on disposable incomes right now. And I think, you know, again, your question is really important, because this week we have had 3 communications from 3 central banks that have all erred on the hawkish side. You know, we started on Monday with the Bank of Canada talking about taking out a couple of insurance rate cuts that they had put in with the energy price decline. And then the Fed's statement and press conference yesterday was probably on the more hawkish end of the spectrum, given the CPI print in the morning. And then the Bank of England today voting 5-3 to keep rates unchanged. I think there is somewhat of a gravitational shift taking place among central banks, where potentially, given how easy financial conditions are, we're going to start telegraphing policy off of model-based forecasts rather than current activity data, which is the world that we have been in.